Hey everyone, welcome to the KE Report Daily Editorial on Monday, September 29th. We are really going around the horn in the resource sector as I'm chatting with Darrell Fletcher. Darrell is the Managing Director of Commodities at Bannockburn Capital Markets. Darrell runs the trading desk over at Bannockburn Capital Markets for commodities. So every month I bring Darrell on to get his insights and what he's seeing in the different commodity moves and where traders and some of his clients are positioning. Darrell, broadly, it seems like everything in the resource market outside of energy, that being oil and natural gas, is running higher. We've had breakouts in precious metals. Base metals have been moving higher. Critical minerals, as well as even rare earths, especially some of the rare earth companies, those have also been moving. So let's just start off. Big picture overview here, Darrell. What have we seen in the last month since we last chatted in the resource sector?
Yes, Corey, thanks for having me. Yeah, you're on. I mean, I look at kind of the broad indexes. I look at market pricing, obviously, in all the metals and energy, but the broader index, Bloomberg Commodity Index is a good index for the broad space. It's up 2%. I'm sorry, it's up 2.2% on the month, which is about a third of the whole move for that index this year. It's up about 6%. And as you know very well, these big moves in the past month and really year to date in the precious metals and the PGMs, this has been a fascinating move. That whole group's up, 10, 20%, depending on which one you're looking at. I was at the Platinum Metal Institute dinner a couple weeks ago, week and a half ago. It was a really good meeting, very interesting, a lot of talk. Four of the top five commodity, we covered 25, like obviously some deeper than others. But four of the top five commodities year to date are platinum, palladium, silver, and gold. So that kind of has been pulling everything. Below that, you have like tin and copper, the base metals. Base metals also keep grinding higher. That's been led by copper this year. The LMEX base metal index is up about 2% on the month and about 11 or 12% now year to date. Again, led by copper, but it's really been kind of a broader move too. We can get into this later. The Freeport mine accident has pushed it sharply in the past week. And then, we've talked about this all year. The crude continues to grind lower. Tried to make a move last week and just got shot down today about 3 or 4% because those real supply and demand fundamentals, when you get past the noise, are not constructive. I think crude's off about 12%. And then the other one we follow closely in the natural gas market as we start to head into winter gets more interesting. It's pretty fairly valued again. I think that's kind of what I felt last month. So it's kind of in a holding pattern, waiting to see what winter does, but supply's, pretty ample. That's kind of the roundup of those 4 or 5 groups.
Yeah, that pretty much takes us through. Just a quick comment on that whole CRB move higher. I find it so interesting and really just speaks to what we're saying here is that energy is a major component, but energy isn't doing much. So it's all these other metals and all these other resource sectors that are moving higher to pull that commodities index higher. What do you take away from that action then? Have we seen this in the past where the largest components aren't doing anything, but everything else in the index seems to be pushing it higher?
Yeah, agreed. I mean, even when you get into if those broad indexes cover agriculture, obviously energy with grains in the metal sector, but this time it's the whole thing's really being pulled by precious platinums and the metals. The base metal sector has been really steadily moving higher all year, and that's somewhat reflective, I guess, of the dollar moving lower, but I think fundamentals are good there too. So yeah, those are and they're making big outsized moves, so it's more than offsetting this move in oil, which is oil is off 10, 12%. So it's not completely, crushing it, but lower. But it's most of this pool has been on the metal side.
Let's talk precious metals because boy, oh boy, I've been to a couple of resource conferences in the last month, and rightfully so. Precious metals have a whole lot of attention because a lot of people are in these stocks that have simply just skyrocketed higher. But so is the gold price. As we're chatting here, gold is over $3,800. It's 3854. Really seems to be marching now even closer to that round 4,000 number. And silver's at $47. I'll have more questions on silver, but gold in terms of consistently hitting all-time highs and consistently pushing higher. What are you seeing in terms of market positioning on the COT reports and just even what you're hearing on the street? Potentially a whole lot more people paying attention.
Oh yeah, it's getting broader investment, I think, across various sectors beyond central banks now for sure. So, like I said, four of the top five commodities year to date are gold, silver, platinum, and palladium. And it's just a unrelenting march right now higher. I think that at some point we're going to see a pullback for sure, some profit taking. But I kind of expect it to be short-lived and shallow. We talked about this in copper probably a couple months ago, how you know, versus prior years, we're at a new floor. I agree with that on copper, and I think there's been a whole new floor set on gold now for go forward, maybe 35, 3,600, depending on which technicals you're looking at. But it's been a really unrelenting move forward. This month alone, everything, gold's 11% and silver's 19% almost. It's like pretty much every day. Platinum and palladium have made huge moves in the past month and the past week. So it's very interesting.
Oh, it's so interesting. And yeah, you just look at even the daily chart, look at the separation of where the gold price is to even the 50-day moving average. That's under 3,500. The 200-day moving average is just over $3,100. So again, this move has been unrelenting, continues to move higher, and that is gold being the main driver behind these precious metals bull markets and also a driver behind generally commodities or resource bull markets too. When people are making money in gold, we do see that money spread out at times. And silver, this is also a precious metal, but also called an industrial metal that has been on a tear. It entered this month around $40 an ounce. It's now close to $50 an ounce. That really brings up the question to me where we hear a lot of people saying, well, it's an industrial metal, so that's going to drive price. I think right now, though, this is a precious metals based move where people are seeing where gold went and they're moving into silver, saying silver's going to play catch up, and it really has been playing catch up over the last couple months.
Yeah, that is a big question. It's an interesting question. I listen to a lot of the other commentators on your shows that follow the PGMs and the precious a little closer than I do. It gets into the equity space too. But yeah, I mean, gold is your pure play. Silver is probably next, but you have some utility. And then platinum and palladium, and catalytic converters, clearly more utility. But they're all acting the same recently. Year to date, month to date, doesn't matter. They're kind of making the same move. So it's very interesting, this question, and I don't know the answers. And there was a lot of really interesting conversations at the Platinum Metal Institute dinner around what role does not just silver, but even getting into platinum and palladium play from the investment side now, as opposed to historically being an industrial metal. Clearly it's somewhere in between base metals and gold. So it's really interesting. And we'll see how this all balances out, or if it just this is all new levels for these.
Yeah, that's a big question, just how much more it can run even in the near term. But that whole silver narrative, then, with the industrial metal use, do you see a certain price level if silver does continue to take off? We're hearing targets of 60, 70, even up to $100 an ounce for silver. Does a certain price then maybe slow down some of that industrial use simply because, look, silver was in the teens not all that long ago, and now it's close to $50?
Yeah, I think I don't really pick price levels, but clearly I think gold's going to have a run into the 4,000. Maybe it's early 2026. Silver, yeah, I mean 50, that gets really toppy, you have to think. Just because it seems like, I mean, there's a decent amount of silver. Platinum, the platinum, there was a lot of the conversation last week with the platinum supply demand situation's tighter, but is it really that tight? So I don't know. I just think as an investment, they're clearly in play here, whether it's right or wrong. The gold being the pure play.
Yeah, and the stocks, boy, oh boy, the stocks have been doing so well. And a lot of these silver stocks, and a lot of these guys, some of them don't even have a resource, and they've gone from single digit or low double digit market caps up to 60, $70 million on the back of not a whole lot of news other than it's a silver story, and the market is clearly wanting more stories out there, and money's going into that small sector. Well, what do you have to say about the overall size of the sector, though? Because look, gold much larger. sector, much larger market cap than silver. It's why silver can move more, but do you hear anything from your clients or when you see any trading around it with silver being such a small market and now money clearly moving into it?
Yeah, and you guys know this. I mean, like the silver, the swings can be from a volatility perspective a lot swifter, up or down. So, and I think, your point on the equities, getting into the smaller equity size space, starting to get really, from any, fundamental looking very overvalued. So yeah, silver, you're going to have higher swings for sure when you start to get these swings, platinum and palladium too. Gold's the pure play, and that's why I think if we do get some profit taking, which you have to think at some point there's going to be some profit taking, that it'll be kind of short and shallow, at least on the gold side. Silver, higher of all.
Well, any pullbacks recently have been short and shallow for gold, even gold's kind of sideways consolidation over summer. Let's move to base metals and let's move to copper because copper almost quietly is continuing to creep higher, now closing in on $5. We all talked about the copper volatility around the tariffs, but fact of the matter is, if you take out that price spike and then price fall, copper's just continuing on this gradual grind higher. We recently had that Freeport news that Grasberg mine temporarily paused because those workers are trapped or were trapped. What does this do for the copper market then? What's driving these generally higher prices?
Yeah, I agree. I think, if you look at the base index led by copper this year, then tin, you've had a gradual, steady increase all year long. Now, this past week, you've had about a 5% pickup in copper alone on an LME 3 month basis, and about 7% on COMEX is at 490 right now as we speak, December contract. So yeah, there's been a sharp uptick in copper in the past week, clearly around the Freeport accident in Grasberg, which just kind of shows that the supply demand situation is deemed tight. You still, longer term, you still have contango, which would reflect. I think we've had some tiny bit of backwardation come back in finally on the front of the curve just because of this accident choking off supply. So that's still being kind of unwound as to how big of an it's a big impact, but I think how it's going to really resolve itself is unknown. So you've had a move up, but like if you look longer term on the copper side, your forwards, you're near $5, which we're there now on the front almost. So 27, you get into the 510 range. So that's really supportive to have these big moves up. We've talked about this before, and then still have, some structure in the curve showing higher. So the fundamental story, infrastructure, electrification, AI, that's all still in play. And this is interesting. This accident's kind of proven that out, that I think generally people feel this is a pretty tight supply demand market. Aluminum is up a couple percent in the past 2 days, past week. Tin is up about 22% year to date. So it's been broad on the base side. If you look at the whole year, really the only one that's kind of flattened down is zinc. So it's been structurally pretty good.
You mentioned supply demand there, and one thing we keep hearing is the lack of new mine builds, the lack of money being put into exploration, and how that is going to, in the near term, but definitely in the long term, really crimp the supply side of that market. What are your thoughts on this? What have you been hearing in terms of, again, supply that should be coming online just doesn't seem to be in the pipeline?
Yeah, I mean, especially from the refining capacity here perspective, that's a big concern. Again, I think a lot of the studies that I've read on copper, and these have been covered on some of your other shows. I mean, the supply versus the demand outcomes as we get into 27, 28, 29, 30 is out of sync. So I think that's why this story is fundamentally supportive, and you're seeing these kind of moves when there's a shock to the supply. Yeah, we've talked about this too. I do think 450 is a new floor as opposed to, years ago, you can't move down into the threes. You're going to have copper, well, you're going to hit this week, pushing five, spikes over five rather than something under four. That's going to be more likely.
What are your thoughts too on the gold companies that have made the transition to copper? It seems like any big acquisitions recently by the gold majors have been more copper focused. Any sort of mergers or acquisitions, again, they're saying we're loaded up on gold, but now we want to move more into the copper space.
Yeah, I mean, you think about it structurally, that's just good diversification for a larger company, to not be so single sourced on your assets. So it makes sense. I mean, you've seen that. You're right on in the bigger companies, some broadening out, but clearly copper and gold are kind of where they want to be.
So for copper and gold, we look at the COT reports. You noticing any major changes, any positioning by commercials or by the hedgers that are catching your eye?
Yeah, I haven't got a read on last Friday's, but I think overall the longs were still net getting longer in a lot of these spaces. But that's what if I recall it right, at least over the past month. So we shall see.
Okay, let's go to energy then, because boy, as we've talked over the last few months, neither one of us has been all that constructive on oil or natural gas. Natural gas looks a little bit better, but oil has been extremely boring, and I still think in a general downtrend. It's not crashing, but it just seems to fade lower and lower, almost month over month. Anything happening to, I guess let's start with oil, more support that market?
Yeah, you saw it's interesting. It tried to make a run last week over 65 WTI basis, and it's been just shot down today. We're off 4% today alone, about $2.50 a barrel, because OPEC Plus has signaled their next meeting, I think, is October 5th, but they've signaled to extend these production increases out into November, and everyone thinks, okay, it's going to be further now. So that's kind of where the fundamentals have taken back over. You've had some support, namely last week in the front, which was pretty much geopolitically driven on pressure on Russia to end the war. So that just got shot down today. So I'm where I've kind of been all year. I'm like range to lower. The curve, like the backwardation of the curve's really flattened out. It gets out to like the mid 61, 61 and a half, and it just dies out there. So, and that, we're only at 63.20 this morning, or this afternoon, I should say. So it's really flattened out. I still think we're going to test 60 pretty easily. The overall, really, our overall arching fundamentals are kind of reflected on what IEA has still projecting a 3.3 million barrel per day surplus in 26. So it's kind of the same, but I do think we're going to have a test lower. It was interesting to see that 65 push 70 Brent last week just get shot down.
Yeah, isn't that something, hey? Every spike just seems to be kind of pushed back lower. And again, you pull up a, let's say, longer term chart, even a term chart, there's still some pressure on the oil sector. But do you see the oil prices being supported at a certain level? Is the whole potential crash environment for oil price not really on the table right now?
Well, I think 60 is a big test. If you look across, like, the United States, North American production basins, I think the general break even is in that, let's just call it 60. Some are obviously lower, some are higher, but let's call it 60. So 60 is going to be a big test. And it's been tested a couple times this year. So the range is just, it's been boring. I mean, you're 60, 65-ish, but I do think the fundamental picture is bearish. So yeah, it's kind of the opposite of gold. Gold keeps moving higher, and if there's a small sell-off, it gets right back up, and crude's kind of the other way around, but it seems to have decent support at 60. I think that'll get tested.
Okay. What about nat gas then? As we said, nat gas is a little bit better supported, but we don't seem to have these price spikes that natural gas can go through sometimes every year. This year has been a bit more muted, but slightly higher pricing environment than I guess last year. But overall, nat gas also not doing much. What are the drivers out there for that market?
Yeah, natural gas is in a good spot. I think that's kind of where it was last month. I think the curves reflecting the prices really balanced. Our storage is ample. It's not incredible. We're like barely ahead of year over year. And this is U.S. storage, and we're almost 6% ahead of the 5 year. It's very similar storage position to where we were this time last year. And think about it, last winter we got some 450 spikes, which makes sense. It can be a lot higher than that even in the winter. So year over year, you're, month to month for we're in November front now. You're up about 12%. October closed last week. That was sub 3, kind of flushed out over the past month. And so I think it's pretty fair value to really in a wait and see environment. The natural gas winter strip is right in front of us now, so winners to be determined. We've got November through March winter strips about 280-ish today, and cash is 3. So it looks really balanced. Production's been running high, like 107, 108 a day, but an LNG is running about 16 almost. It's starting to turn back up. So it's really well balanced right now, and it's a wait and see for winter.
All right, enough said there, Darrell. But look, overall, there's a lot of bright lights in the resource sector. It's just energy that seems to be lagging. Maybe there's an opportunity there, but it also doesn't sound like the market is pricing in or the market is worried about major price spikes. But hey, that can all change very quickly for oil and natural gas. And other than that, precious metals continue to dominate the headlines, but don't forget about these other resource areas that are also making some very nice gains. Darrell, as always, thanks for your time. Again, Darrell Fletcher, Managing Director of Commodities at Bannockburn Capital Markets. Click the link in the show notes to learn more about what Bannockburn does. Darrell, I'll chat with you next month, buddy.
Thanks, Corey.